Hello traders, good morning, Vladimir here, and this is the weekly forecast for the week 25 of July 2016, the last week of July, 1 week before the official uh, holiday months of the traders begin, and we can feel that the volatility slowly drops during summer, but don't forget this is maybe one of the most important weeks to come, and which could, of course, make end of July and August to be much more active than they normally are. And the reason is, of course, we have the Federal Reserve FOMC meeting this Wednesday to come. But the main thing, the Fed is not expected to change nothing, at least as for now. The main thing would be the statement from Bank of Japan right after that, and the expectations show that traders believe Central Bank of Japan will act this or other way. Maybe they will increase the purchases, maybe they will cut the rates by 10 more basic points, and that's actually the main interest this week, and it actually somehow counter what the Bank of Japan by himself said, that currently there is no reason to intervene in the market. The thing is, what will happen if they will actually not intervene? How the market will react right after that? And that could, of course, lead for another rally of the yen pairs, of the yen currency versus the majors, to drop of the yen pairs, actually, like dollar yen could drop lower, euro yen could drop lower, and so on. So what's the things we are going to trade? Let's put the things on the table and let's start to take a look on our trading opportunities. The first one would be, from my point of view, one of the greatest pairs opportunities. That's Aussie Kiwi, and the reason it's one of the greatest is actually that we have, let's put the lines, okay, we had here cycle to the upside, and we now in kind of a range created, right? Now this range started by two false breaks in a row, which actually hint us it is going to be a false break, and I mean, of course, one here, one here. We broke and retraced, we broke and retraced. Then we had one on the bottom, we broke and retraced, which brings us into this kind of movement. So what should happen technically right from here is one more push lower and continuation to the upside. Then this push could be like this, and the rally take place, or this push, this actually could be, such push could be also like this. Okay, two waves here, or even two waves of here to this area somewhere around 105.50, and then a massive rally. So from my point of view, the best thing to do is to expect that movement, put the lines, of course, get closer, and then buy with the breakouts to continue with the rally to come. And if it continues to straight to the downside, fine, we would be expecting for a buy around 105.85 area, which could be also a great opportunity. Now, watching on a weekly chart, you remember where this buy come from, of course, from the head and shoulders and from the monthly special cycle, which was here. Okay, just want to remind you, special cycle means that the first and the last legs are equal, and this one could be double or triple, this one. That's the idea. Now after that we expect a correction, which we are currently, and this is also head and shoulders building itself on the weekly chart, which really looks massive, right? And we definitely expect a continuation to the upside. So be involved on the buys is the right thing to do here, and look for these opportunities, from my point of view, is again the right thing to do. All right, let's continue. Euro dollar is the next one. Euro dollar, with all the things happen, and with the speech from Draghi last week, remain bearish, of course, but I am still doubtful how strong that could remain. That's what I see. I believe down move is limited. Yes, we can still go to 108 or so until this divergence would be created, and that could happen on any single moment. Daily chart shows the potential divergence, 4-hour chart shows the potential divergence, so that could really start any single moment. Yeah, we could get it below 109, we could get 108, 107, definitely. But the chances to expect some fast, serious rally are getting higher. Now, for short-term traders of you, we have a classical trend line. As long as it holds, stay with your short. If the trend line breaks, that's time to step back and trade it very, very, very carefully. Which brings me to the next pair, which is the pound dollar, which still remains kind of a mystery. From one side, fundamentally, it's ready for kind of a pullback, right? Because we do have new prime minister there. Central bank did not print any new money or anything like that, so that looks really, really good. But somehow it holds. So from my point of view, what's going to happen right now is we need to start the drop with the break of this triangle and the head and shoulders line. This was the head and shoulders I was drawing. I hope it was clear. Let me just redraw it for you guys. Sorry, I drew and removed, and this is the one. Okay, that's the head and shoulders pattern. Now if it holds and we got a breakout, retrace, classical, we can go and look for buys opportunities, right, to close the gap. Our gap is right here, 137 plus. So there is really serious sorry, my bad. It's 136.30 right here with the close price, of course. Oh, it provides us for something like 500 points to the upside, which is very, very serious, of course. The question, however, is what happens if it breaks it down? And that could happen, and then it means very likely that the pound dollar is after one more push lower, which could, in this scenario, take us back to, if this is a triangle, could take us back to 125 or so, even lower. It's like 120 here. So that's, again, doable, of course. Let's see how the week starts. Break below the triangle and hold below. This is the one. This is the triangle I refer to. Break below, retest, and hold below, and we are after short. Break above, retest, hold above, and we are after longs to close the gap right here. Again, to complete the second leg, actually. Which is going to happen? Time will judge, time will tell. We are not after guessing here. Remember that, guys. That's very, very important. And the cross in between, euro pound. Last week, we suggested that one of the scenarios could happen would be the triangle, and we are in a triangle. Break below the triangle should lead for a gap close around 08140, 08130, and to complete the double wave. Break above it would simply hint that we are very likely, after one more, probably final rally towards 088 or so, maybe to complete this cycling here before it starts the correction to the downside big time. So again, triangle, right? We need to see where we break and what we actually have after that, right? Where we break and hold. This could be a hold that will lead us to 08130 to close this gap right here. Break above and hold, which means we are going to 088 area approximately. Keep an eye on this one. This is the euro pound pair, very interesting. And this is the 4-hour chart triangle, of course. The reason I look on this 4-hour chart is just to join the weekly and the daily cycles combinations. That's basically what it is about. Ideally, we get one more low before the rally. But again, this is very, very important fundamental week. Let's see what the market brings to us. We are not after bets or guess or any kind of predictions. We are after trading here. Remember that, guys. Okay, next one on the list is going to be the dollar yen, because dollar yen is actually, as I said, maybe the leader for this week, the second part of the week after the Bank of Japan event to take place. So what's coming? According to the monthly chart, there is a chance that this cycle is not over, this corrective cycle, as we had here some kind of monster movement that could be like number one more for a divergence, and a rally. Could happen? Definitely. According to weekly chart, we already had a divergence, right? Here. So there is a chance, basically, that we are currently after some kind of corrective cycle, which could take us back to 110, 112, and so on. Maybe even back to this trend, right? Watching on a daily chart, we also had the bullish divergence. We do not have, though, a bullish convergence yet. So what could happen on such scenario is we are playing in kind of a range, and again aiming the 112 after that. So by ideal, if this is the situation, right, this is cycle number one, we got some corrective movement like that, and one more push to the upside, which will actually keep us in a closed range, since we had one false break here and another false break right here, right, and maybe one more right here. So this could keep us in this kind of ranging move, which means on the short term we look on the 1 hour chart, right? On the 1 hour chart we had first push to the downside, and now we kind of have a flag. Break below the flag, retest, and we can try short to close this gap slightly below 105, maybe even a bit lower, to complete a leg and B leg, right? Or 1 and 2. Two equal legs to the downside. Then we will switch by looking for possible longs. What should we do if we have a rally from here? Could that happen? The answer is yes, but we have to be in this place very, very careful, because we did have one false break right here, right? We did have one false break right here. We might get and experience one more, which means we have to play it carefully. I still expect it to mirror this move, okay, reach this area, and from there very likely to start the up move. But technically, we can say the scenarios could happen this or other way, right? Fundamentally, everything would fall and rely on the Bank of Japan, and of course the Federal Reserve before that. So until then, moves could be tricky. Right after that, things could go and get decided. So keep an eye, guys, that could be very, very interesting. Next ones on the list are going to be the commodities pairs. One of them is Mr. Dollar Canadian, which has still not decided what's coming next. As I said, and I said not once, from my point of view, every rally to here or to here would lead us for a sell. Now currently we are on a very interesting place, because we did have one leg, right? And we do have the second leg of the triangle developing. So basically we are in a sell area, right? If we take a look on the actually it's still daily, but if we take a look on this cycle developing, it brings us to the same place, around 133, slightly lower, right? And if we drop lower to the 4-hour chart, for example, we can see that we may be building here, which started like triple cycle, could turn to be potentially some special cycle, right, with a continuing divergence. And from this area we might get this false break here, right, continuing divergence. So basically, if we can get closer to 133, even lower, like 132.50 would really make the job for the pair, we would be after the trend line breakout. We will want to see the momentum gained, retrace, and to go for a sell. Okay, so yeah, we actually started to reach the sell zone, which starts to be right here. But the best thing to do right now is to get a momentum. And we have this trend line. Let's wait for the breakout. Let's make sure it establishes itself below this area. And then we will be after sells. Guys, don't forget the weekly chart. Okay, that's whole scenario starts from here. Weekly and monthly cycle. One more push to the downside could happen any single moment, which means it could take us down to, if we measure it, let's say even from the highest points like 135, 136, we still expected to reach to something like 121, 120. So a lot of the bearish move to help to look at and to expect. 132 plus, we start to experience the pressure. That's where we believe action is coming, which brings me to the next important commodity pair, and that's the New Zealandian dollar. Now this pair had two false breaks already right here, right? It might go and complete one more. For my point of view, we should get ready for buys. This is a bullish hidden divergence forming potentially. It's coming very, very, very close to here. I want to remind you we did not have any divergence yet on the weekly cycle. We did it from here, but this is not where divergence starts. Divergence comes at the end of the move. So currently we still did not have completed divergence. So basically anything from here and lower down to 080, 068, 067, maybe even slightly lower, turn to be a buy area. This is our buy area for this pair. Now, how the best to enter such trade? We didn't have any false break yet. We did have 3 continuing lows on the chart. We need one more low to complete a classical bullish continuing divergence. If we manage to have it, we start to look for false breaks and momentumal breakout. Momentumal breakout means higher highs. Why? Because after a false break, we want to see bulls coming back in the game, pushing the price. Then we are after pullbacks back to the middle of the area, and versus the last bottom to be created, we are after possible longs, which could take us to this high again or maybe even new highs. We will be, of course, starting with taking partials around 071, 072, depends on the movement, but basically this is our plan. So, to make long story short, we need one more push, and we are after false breaks. Once we got false break, we need higher highs. Then we are after buys, the retraces back to the middle approximately. Stop loss is going to be below the last bottom. Target is going to be for maybe even for new highs, but we will start with the middle. We just need to make sure we have a good risk reward. Now, what do we do if after one false break we continue for another false break? Even better. We don't just rely on false break. We need a momentumal breakout to the upside. So we need false break, a rally for higher highs, pull back, and we are after buys. Keep in mind that could be a really good opportunity, which brings me back to the next pair, which is the Aussie versus the dollar, of course. Now this one is also a bit of mystery because technically it could, maybe even should, take us down to 0.73 or so. We also have a trend line waiting right there. That could be ideal. If we have this push, that could be really, really, really ideal. We had a triple cycle, actually it's more like a kind of a special here, but anyway, we had one cycle here. So one of the scenarios to happen is we are going to play in kind of a range right now, and one more push to happen right after that. And if this is what about to happen, we will be longing this area right after that. Of course, we will need the bullish divergence to form to confirm our buy, but this is plan number 1. Okay, that's one of the scenarios, and basically the only plan currently. As the way it develops right now, I would not look for anything else for a buy. Ideally, the triangle and breakout. Not ideally, we could get something like that. And I said not ideally because that could be confusing also sign. So we have to play it very careful here. And if that's what's about to happen, no problems. When we are after buy with the sell with the breakout, aiming for the same scenario exactly. But the ideal for us is buy the bottoms. That's what we want to happen. That's where we will want to get an action. Okay, euro yen. Euro yen. Well, that's actually like together like the dollar yen. We might have a triangle here with continuation move, or we might go for a deeper correction, which looks very doable. Back to the trend line, and we are after possible longs again. But guys, the most important thing right now here, play it safe. Because monthly chart maybe not over with weekly chart combinations, we need one more bottom, but daily chart looks like it could make us for one more high until divergence created. So play it very, 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 very safe, and maybe even best to wait until the Bank of Japan event over. Okay, pound yen, also same story exactly. According to monthly and weekly combos, nothing is over. There is more to come. According to daily, there is not a bad chance at all that we will get something like that. Maybe back to the trend line. Okay, so currently we are on a gap area and we hold it. On the 4-hour chart, we can see clear range forming here, right? This is our range. So we might get one more move like that with a false break, maybe back to the trend line. And that would hint us for a buy with the breakouts for one more high. As I said, back to the trend line. Or by cashing here, we might get one more push up with some potential false break and bearish divergence and go for a sell. A lot will be decided by the move of Bank of Japan. And that's what we have to pay attention to. With all the wish we have to act, we have to play carefully. Next one on the list is going to be where is that? Pound versus the Kiwi, which is dancing around the gap close, and I want to see it closing the gap, completing this kind of movement, which after would be, if it completes the gap with this divergence, we will be looking to sell the breakouts. So that's for pound Kiwi. This is the bearish trend line we have and the bearish hidden divergence we have. And with the breakout down, we're protecting the last high, and we'll be expecting probably for one more push down back to 178, maybe even for a new bottom below 175. It's very, very doable as well. Keep an eye here. Could be very nice opportunity as well. Gold and silver. I'll start with silver because this one probably has more to go. It had first movement here. So far holding the trend line. So from my point of view, we are after deeper push. I would want to get it around 1850, maybe even ideally lower, which after would be looking to go for buys. Now guys, keep an eye because that's a potential bullish divergence. If the central banks disappoint, okay, this is going to be an action area, an action commodity, because this is what the traders jump on terms of uncertainty. You remember that, right? Now this is really interesting opportunity, and if this divergence take place even here, this is the trend line. Break above it, retest and hold, and we are after buys, expecting new buy, new high, right? And if it continues to go lower, then as I said, 18, 60, 50, maybe, and ideally even lower, we would be after buys. If we take a look on some cycle areas. 100 is irrelevant because the levels are not equal, but this is around, even below, the 161 is below 18, which could happen, of course. This is cycle number 1. If we take a look on this cycle developing, guess where the 161.8? On the same place. See that? And if we measure it like a triangle, which is also, where is that? Which is also, what's wrong with this lens? Okay, which is also doable, this triangle. It also brings us to the same place. Now that could really be a monster. I don't claim for necessary it will, but stay short as long as the trend line holds. If the trend line breaks, that's a sign that we might consider switch of the positions. So on the short term, as I said, there is a trend line which is holding the stiff resistance. On short term, we might get something like that, and we will want to get the sell closer to the trend line, of course, because it reduces the risk, and we will be aiming to 1850 or maybe even lower according to the way the cycle develops. So keep an eye here. That's really, really good opportunity, and we will be after that to trade it. Okay, indices and oil. Let's take a look what we have there. On terms of oil, I believe oil is bottoming. Let's make sure we have it here. Yes, okay, here we go. This is the last contract we have. Okay, oil has more to go. Now it could start it lower, like 80, 43, maybe even something like 40 or so. But it has more to rally. Now, watching on a daily chart, we still didn't have any false break here. This one did not complete, did not hold actually. This one did not happen yet. So we mark the trend line. We will want to get it after the breakouts. Neither here or here, breakout, retest, and we would be after highs, after new highs, like 40, 54, maybe even higher area. So get ready for longs. Okay, and the best place would be 44, 43 down to 40, 39, ideal area to act. And the indices story did not change. We still remain under same pressure, same idea exactly. No need to rush here. We will be looking only for the sell setups actually. And even if we have new highs, we have a barrier of 2200 or so. This week we have a lot of companies to publish their reports, so that could have an impact, of course, which we have to pay attention to. Bad results and lack of activity from central banks could make it. But again, we don't bet, we don't guess, we wait for the opportunity, we attack. Now, I started to talk about gold and silver. I spoke about silver, I didn't mention the gold. Gold, I believe, has also a bit more to go lower. That could be to below 1300 to complete its cycle. We still don't have any bullish divergence formed and confirmed. We have a trend line here going great. We develop kind of cycling here. Stay bearish as long as the divergence did not complete itself. After it does, we will be long only after momentum will break out to the upside, not before, which means new highs and go above the last trend line. So that would be all for today. That's the opportunities as I say them. Of course, there are more things developing, opportunities like the pound Canadian, pound Aussie and stuff, but I don't want to overexposed to the pounds, as you know. It doesn't make any sense, especially after Brexit. So we have to keep it calm. We have to keep it safe this week and keep a very close eye to the things to be developed and happen in the central banks events. Thank you for your time watching this video, guys. I hope you enjoyed. You have clear plans now to follow and to enjoy the moves. And if you have any question or any pair you would like me to cover, just let me know. Write in the comment, and I will publish as soon as possible. And feel free to share with anyone you would like and you believe that could have an advantage and benefit by watching this video. Don't forget to click the like button and throw a comment if you enjoyed the video. And once again, thank you for your time watching this video. I wish you a wonderful trading week. Stay safe and don't force things to happen. Remember, we are not after hero calls. We are after the correct calls. That's the most important thing for us to focus. Enjoy your week, guys. I'll see you soon. Yours, Vladimir Ribakov.